What's good, traders? You're welcome to episode 4 of the Forex mentorship. So today we'll be discussing about what the trend is and the different types of trend in the financial market. So in the financial market, we have what we call trend, and trend just simply means the direction of the market. Now, the direction of the market can either be upward or downward, and it can also be in a consolidation state. Consolidation in the sense that it is ranging, not moving up or moving down. So let's start with the first one, which is the uptrend. So the uptrend just simply means when a market is going higher, guys, it's creating higher highs and higher lows. So let's just analyze this structure here. We can see here we have this first part. This is called a low, and this is called a high. This is called a higher low. Why is it called a higher low? Because this low is higher than this or this previous low. So we call this a higher low, and we call this a higher high because this high is higher than this high. And here we call this a higher low because this low is higher than this low. And also here will be called a higher high. So this is just how a uptrend is. It just symbolizes the market moving upward. So that's just what an uptrend means in the financial market. It means the market moving upward. To get an uptrend is very simple. We can just simply say higher highs and higher lows is equals to uptrend, meaning that we need higher highs and higher lows to form an uptrend. So we can see here with this diagram we are drawing here, you can see this point is a low, and we need a high, we need a higher low. This low must be higher than this previous low, and the high must be higher than the previous high, and also this low must be higher than the previous low. So that's just what an uptrend looks like in the financial market. In normal life market, it will not be perfectly drawn like this. It will be following this structure. So we can see this is the first low, this is a higher low, and we can also see here we have another higher low, and we can also see here we have a high, and we have a higher high. Why is it called a higher high? Because this high is greater than this high. Then we have another higher high. So this simply means that when the market is forming an uptrend, we are only looking for buy trades. But we discussed that when to look for buy trade. But in an uptrend, we're only looking for buy opportunity because we know that the market is going upward. So we are following the flow of the market. So this is the first type of trend in the market, which is called the uptrend. So the next one we have is called the downtrend. It's just the opposite of the uptrend. It means the market is going down. So the opposite of an uptrend is a downtrend. A downtrend is a market facing downward. That means the market is going down. And also is also called a bearish trend, meaning it's falling or going down. So to form a bearish trend, we need a high, a low, a lower high. So let's indicate it here. You can see we have a lower high. We need also a lower low, and we need another lower high. So this is very basic. This is very basic on understanding what a trend is. So a bullish trend is just simply a market going upward, creating higher highs and higher lows. While a bearish trend is simply just a market going down, creating lower lows and lower highs. So that's just what a downtrend simply means. So the last one is called consolidation. This is a point where the market is in a level of indecision. So the market is just ranging. For example, we have this first point, we have something like this. So at this point, the market is also moving within a range or oscillating within certain range band and without having any direction. So it's just moving around from this point A back to here and here and here. So these are the three types of trends we have in the financial market. So let's go into the chart and see the live examples of how it looks like. So for example, let's talk about the downtrend in the market. For example, this is GDP USD. That's Great Britain pounds against United States dollar. So we say the downtrend is a market creating lower lows and also lower highs. So we need the market to be moving in this structure. So it might not be perfect like this, but it's seen obeying this structure. So that we have something like this point being the high, and here being the low, and here we have a lower high. Why? Because this high here is lower than this. So we have a lower high, and here we have a lower low because this low is lower than this. So we have a lower low. Here we have a lower high because this high is lower than this, and here we have a lower low because this low is lower than this, and also here we have a lower high because this high is lower than this. So let's see how it is in this market. This GDP USD. So we can see also in the market, this is our high. You can see this is high, and we have a low, we have a lower high, we have a lower low, we have a lower high, and we have a lower low, we have a lower high and lower low, lower low, lower high, lower low, and lower high, and just a low, not a lower low, because this low is not yet lower than this. So we just have a low here. So this is an example of how it looks like in the real life market. So you see, it's not usually that perfect, just as our drawing is, but it follows that sequence. You can see this is a high, a lower low, a lower high, and so it's following that sequence. So this is how a downtrend look in the financial market. So let's flip it and go to an uptrend. So an uptrend is just the opposite of it. So let's look how it is. For example, let's draw a diagram. So for an uptrend, we need to have a high, right? A higher low, higher high, higher low, higher high, higher low, higher high. So this is how it is. Also in the market, you can see this is a low, which is here. So we have a low, we have a higher high, which is here. We have a higher high, which is here. We have a higher low, which is here. We have a higher high, which is also here. We have a higher low, and we have higher high, higher low, higher high, higher low, higher high, and higher low. This is just a high. It's not above here, so we'll just call this a high. So this is just an example of how an uptrend is, and also how a downtrend is. So there's also what we call a reversal. So the word reversal just simply means a change in structure. So that means when we are changing from an uptrend to a downtrend, or we are changing from a downtrend to an uptrend. So an example of a reversal is just here. We can see that here we are having an uptrend, and the market has been creating higher highs. You can see how the market has been going upward, creating higher highs, higher highs, higher highs, higher highs, and higher lows. So when it's going up, it looks like a mountain, like it's creating highs that are going upward. So we can also see when it's going down, it's creating lower highs, So we can see that at this point in time, it changed from an uptrend to a downtrend at the point whereby this low is being taken out here. So it changes from this market going upward to start going downward. So we can just say reversal is when the market changes from an upward movement to a downward movement, or from a downward movement to an upward movement. So for example, this upward market movement here, Imeti price altered this low and break this low below. It started changing from an uptrend to a downtrend, and Imeti created a new lower high. That means the trend has been solidified to go down. So let's just draw a diagram to explain what I mean. So an uptrend looks like this. So at this point in time, market altered this low, it changes from an uptrend to a downtrend. So we have this. So this point is the last level of defense holding the market from going down, and the market breaks below it. This uptrend has changed to a downtrend. So that's just what it means. So let's talk about the next market condition, which is consolidation. So consolidation is just a state whereby the market is trying to rebalance itself. The point whereby the market is moving in a certain range. So just like this. So let's just identify it in the chart. So we have something like this, a range. So let's identify it. We can see here we had a range here. You can see how the market was moving at this point. So this is a low, this is a high, this is a low, this is a high, this is a low, and before we finally break above the range. So this is a ranging market. So this is called consolidation or a range in the market. So guys, for basic level, this is just what a trend is. We have an uptrend and we have a downtrend. So in advance, you understand the different dynamics that makes up a trend and the different parts of a trend. So for now, this is just what a trend is. So thank you guys for staying to the end of this episode. I'll see you in the next episode, guys. Thank you.